Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik and this is episode 24 of my Dow Analysis series. Today we will be analyzing the 8th largest company in the Dow by market cap, which is Procter and Gamble, ticker symbol PG. Procter and Gamble is an American multinational consumer goods corporation that is headquartered in Cincinnati, Ohio. Fun fact, I go to college at the University of Cincinnati, so I've been living there down in Cincinnati a lot recently. But PG splits their business into 5 segments, which are healthcare, beauty, grooming, fabric and home care, and baby and feminine care. And within those 5 segments, they have 10 total product categories. And within these categories, they have some of the strongest and well-known consumer brands. Some of these include Head & Shoulders, Olay, Old Spice, Braun, Gillette, Crest, Oral-B, Pepto-Bismol, Vicks, Downy, Tide, Dawn, Mr. Clean, Pampers, Tampax, Bounty, and Charmin, among many others. So you can see they really have a wide variety of products and super strong brands that a lot of people recognize. Among these 5 segments, revenue is split up fairly nicely, as we can see here, with fabric and home care making up the largest chunk at about 35% of revenues, and then grooming making up the smallest chunk at about 8%. And as I mentioned before, Procter & Gamble is a multinational corporation. As we can see here, more than half their revenues at about 51% actually come from outside of North America, and that's pretty cool to see and really gives them a lot of strength and flexibility when it comes to the always changing macroeconomic environment. Procter & Gamble most recently reported their 4th quarter fiscal year 2022 earnings. So they reported those earnings around the end of July, and their fiscal year goes from July 1st to June 30th. So that means their 2022 fiscal year just ended at the end of this past June. So in the 4th quarter, net sales were $19.5 billion, which was up 3% year over year, and earnings per share was up 7% year over year to $1.21 per share. And then for the full fiscal year, sales were up 5% to $80.2 billion, and EPS was $5.81 per share, which was up 3% year over year. For the 4th quarter, gross margin actually decreased fairly substantially by 370 basis points, and they said that most of that was driven by increased commodity and freight costs. So inflation is definitely, affecting Procter & Gamble and their business, and the company is also expecting commodity and freight costs to have a decent size impact on their business in 2023. They expect that to be, a headwind, and they do expect most of that to occur, in the first half of 2023. But again, that's just, their kind of guess as to what's going to happen. Another cool thing I saw in the earnings report is how much they paid in dividends. So in 2022, they paid $8.8 billion in dividends, and they expect to pay $9 billion in 2023. That's really cool to see because they're getting pretty close to that $10 billion a year threshold. There's really only a few companies out there, I think, that pay, $10 billion or more in dividends per year. So they're really, committed to rewarding shareholders. And on top of that, they repurchased $10 billion worth of shares in 2022, and they expect to repurchase between $6 and $8 billion worth of shares in 2023. Now, looking at the balance sheet right here, from the end of June 2021 to the end of June 2022, cash was down about $3.1 billion. And with some increases in inventories, current assets decreased by about $1.6 billion over that year to $21.7 billion. And when we look at current liabilities, they are at $33.1 billion right now, which is down just a small amount, about $50 million from a year ago. And this actually gives Procter & Gamble a current ratio of 0.65, which looks pretty bad at first. But when we consider that Procter & Gamble produces earnings in the range of $14 billion per year, this, really more than makes up for that $11.4 billion gap between current assets and current liabilities. And those earnings, are super consistent and reliable given the nature of their business. Looking at total assets as well, we see that they are sitting at $117.2 billion, which is down about $2.1 billion from last year. And total liabilities are also down year over year by about $2.3 billion. Looking at debt, this looks pretty healthy, I think. Right now, total debt is $31.5 billion, which we find by adding the debt due within 1 year and long-term debt. This is down about $500 million from last year, but net debt is up about $2.6 billion year over year because of the decrease in cash that we saw earlier. When we compare that to the equity, we see that the debt to equity ratio right now is about 0.67, which is another sign of their healthy debt position. And another metric that I like to look at sometimes related to the balance sheet is the return on equity. We find this by dividing net income by shareholders' equity. So for 2022, net income was $14.742 billion, and we divide that by shareholders' equity here, and that gives us a return on equity of 31.5%, which is really fantastic. This is certainly a good sign to see, but some people would definitely argue that it's not that meaningful right now, because we can see that Procter & Gamble has bought back over $120 billion of stock over the years, which actually counts as a liability when calculating shareholders' equity. So if they hadn't bought back that stock, then shareholders' equity would be much higher, which would, lower the return on equity. So it's definitely good to see that 31.5% return on equity that we calculated, but in this case, it's really not anything super exciting. Taking a peek now at the dividends, Procter & Gamble has a pretty conservative dividend yield of 2.7% with a healthy payout ratio of 61%. One of the many perks of owning Procter & Gamble is that strong dividend and that they are a dividend king. We can see they have been raising their dividend for 65 consecutive years. And over the last 5 years, they have increased the dividend by 5.6% on average. In that 5% range, I think is pretty healthy for a company like Procter & Gamble. They're not growing super quickly. They are continuing to grow their earnings some, but they don't have all that much rapid growth ahead of them. At least I don't think so. To see, dividend growth in the range of 5%, I think is pretty solid for a company like Procter & Gamble, and combine that with the stability and safety of the dividend, and I think it becomes pretty dangerous. Looking now to valuation, Procter & Gamble is trading at a 23 PE right now, which is definitely expensive from a historical perspective. We can look at, what their PE ratio looks like over time, and, it's generally been trending upwards over the past 10 or 12 years. And 23 is a bit higher than it's been in the past. When we look at their EPS over time, this makes a lot of sense. So Procter & Gamble has definitely grown their EPS from around $4 per share around 2010 to close to $6 per share now, but that's really not that big of an increase over 10 or 12 years. So when earnings are growing kind of slowly and generally the stock price has been growing pretty quickly, that leads to an increasing PE ratio in general. So I think Procter & Gamble is at a pretty decent price right now, but I think the stock could still go down a fair bit, and it really wouldn't look all that more attractive, at least to me. When we compare them to some of their peers, Procter & Gamble is fairly average in that regard. The consumer defensive sector has an average PE of 22, and the consumer packaged goods industry has an average PE of 19. So Procter & Gamble looks pretty similar to their peers in that regard. Also, taking a look at a discounted cash flow calculation, Procter & Gamble definitely looks a little bit overvalued from that perspective as well. Even though the stock is down around 16% year to date to around $136 per share, the fair value I calculated with my DCF model is $118 per share, which gives us a buy price of $106 with a 10% margin of safety that I like to apply. And 106 is really not too far away from where Procter & Gamble was during their March 2020 lows. So I really don't expect the stock to fall that far, anytime soon. But again, anything is definitely possible. So we'll just have to see what happens. When we look at a 3-year chart of Procter & Gamble stock, we can see they are still above pre-pandemic highs for sure, but they have definitely fallen a fair bit from where their peak was around $165 at the beginning of this year. What's interesting to me is their pre-pandemic high was right around $129 per share, which is pretty much exactly where they found support and bounced off of this past June. If we zoom in now to the 1-year chart, we can see that they also have some support around $138, which they are a little bit below right now. However, that support could be failing a bit now. It's really hard to tell. They've been kind of trending below that support a little bit the past few days and weeks, so it might not be as strong anymore. So although Procter & Gamble does have decent support around 129, like I said before, they really don't have much volume below that. So if they do fall below $130 again, it could be more red from there for a little bit. And that's kind of where I would be a little bit more interested, I think, if they get, below 130, closer to maybe 120, something like that. Two of the best things that I see in Procter & Gamble is their ownership of so many fantastic and well-known brands, as well as their diversified revenue around the world. And additionally, their products are just staples in everyone's daily lives. Everyone is always going to need toilet paper and toothpaste and shampoo and similar products like that Procter and Gamble sells. And this really creates a lot of reoccurring and kind of predictable revenue for Procter and Gamble that can drive a strong and growing dividend, as well as, paying off all their liabilities without any issue. I really do like Procter and Gamble as a company and an investment, and I think the current price is fair given their superior products and consistency of the dividend. But I won't really be super excited about buying a lot of Procter & Gamble unless it gets below maybe $120. But I, recently have been buying small amounts here and there because it is a great company, and over time I do want to accumulate a larger ownership stake in that company. So, you have to just keep buying over time with a company like this. But like I said, if it goes below 120, maybe 110, I would definitely be buying a bit more heavily into Procter & Gamble. So let me know your thoughts on Procter & Gamble in the comments down below, and tell me what you think the fair value is. If you want to know how much Procter & Gamble paid me in dividends in the month of August, make sure to watch this video right up here. Thanks for watching, and I'll see you all in the next one.